So dollar might gain strength to push the upside. Why their unemployment rate, the forecast was 4.4%. The actual that came out was 4.3%. So they make a little change yesterday.
Yes, but
So I think
yeah. So if when was the NF? I thought NFP is always like Fridays.
they released it yesterday. They released the NFT yesterday.
Oh, so the day changed.
Yes, sir. Because
Okay,
the last time they released the NFT, they're supposed to cut the rate, but they didn't cut it. They had it.
okay,
So that's why it dropped that last week. I mean, 2 weeks ago. It sells massively. So after some time, it makes a retreat.
okay. Um, but yes, but let's look at what the technicals is saying because we are technical traders. I mean,
Yes,
let's say me, technical. So what I think about the news and the sentiment fundamentals is, for me particularly, what I think about that is, even yesterday when I was in class, I had these thoughts. I was thinking about these things that the market uh, plays with chart patterns and price action forming within the higher time frames. So, but then it is the sentiment or the news fundamentals are what creates those manipulations, impulsive moves, okay? And then mostly sometimes those manipulations and impulsive moves can give us or can show the deviations in the market and also can also give the exact or real direction of the market because sometimes normal because there are different sections that we trade, normal price action might not be able to be moving at speed all the time, and so we need news, we need some events and things to move the market more faster than normal. So that was my thoughts when I was because I was like, it's been a while looking at the market. What as I'm staying, I've been staying away for 3 weeks. What can I think about or summarize in my mind as I'll be returning back to be analyzing the market? And this is what I concluded was that the market is always going to play according to the technicals or whatever price action strategies or concept it is following is going to play according to that in relation to the higher time frame, and all other things are just going to be manipulations, deviations, and helping us get direction, but at the end of the day everything is going to fit into the higher time frame. Okay, so like the example you are giving now, though it can be said that the news was released, the rate, unemployment rate is, did you say it was low? Because I've not I've not looked at that, and actually I'm not a good analyst of the fundamentals and then the news event, but that's something that I want to really learn. Um, so whatever the way you explain it, whichever way it is, um, if it's supposed to make the dollar become strong. So what I can say here is that um, the dollar is, so even from the higher time frame, most highest time frame, we can see if this is the daily time frame now, but let's go to weekly, and then let's go to monthly. Good. So if you look at this monthly now, it is clear that um and it's been like this for a long time. We've been analyzing this for a long time. Okay. So if you look at it from this way, we can see that clearly the market is the market was bearish. Okay, so let's see. We were bullish from here up, then we came down 100% to the start of this move from here to the top, back down here. Then we pulled up a little drop, okay, and then we were able to fully sweep where this move originally started, which is here. And if I'm to use the line chart, you will see that. So let me go to the line chart. Yes, you will see things clearly, okay. But then the most significant high that we've had is here, this point. And let me change the color for this rectangle and make it yellow. Okay, good. Is this the most significant high we've had? After that is this area. Okay, so all from this high, we came here back into where this whole move started from. Then we did some consolidation. Then we were able to break out of the consolidation, the range to the top here. So we can see the first hit here. This was the point that price put to, and then came down, swept down below here. I mean, taking these lows here, what does it tell us? It's a sign that the market is telling us that below these lows here, okay, we're going to see sellers take charge. Okay. So that's the idea. Okay. So price came and hit here and then pushed back up, which means buyers stepped into the market here and they pushed the price up to this point. But previously it was this same exact point where the buyers just started moving the market up impulsively, which means that this place is a strong support point. So we see at this exact point, price start moving up and went up real big. Then price comes to the same point, then it did this kind of a pull up. So at this point, we have now two touches here at this same point in price that can qualify for us to have reason to believe that this point is looking very strong. So we have to pay attention to this point, and I've put a line, let's say this black line here. Okay. So price goes up, hit this point, where I put this blue line also. They hit this point, comes down, and then we can see on the line chart, price closes below this black point. So the close below the black point means that, okay, buyers were here, but this close below them is telling us that, indicating to us that, okay, sellers have likely weaken the point where the buyers were. And so if price is to stay below this black line or this point here, we're going to have sellers push the price much more lower. So that's the concept. But after price swept below this buyer's point here, then it pulled back again up, dropped, it pulled back again up, came down, move up, drop, and close below the same black line again. So the black line is what we are using to study what price is doing or where we're going to be interested to either buy or sell. But at this point here, we can see the market is just consolidating. Okay. But then in the consolidation, we are looking at this exact black point. So let me make the black point, let's say red. Let me make it something like red. Let me see. Let me make it red. Good. So we can see that point as red. And let me make here also red. Okay, good. So we can see these two red, this red big point, we can see as a clean support. And then the up here, because from this first hit of the support, when the buyers push the price, this is the next important area where the price hit before coming down back to the support again. So we can see those 2 points as very strong. Okay, so these are the points I'm going to be focusing on right now. Okay, so the concept I'm trying to explain here is that now we have a clean support here because we have an impulsive push away from this exact point on the line chart up. Price retraces and stopped exactly at this same point and then made an important pullback up to here. So we have two breaks or two touches here. Now, we want to see that price is above this red line for buys. And as long as price is going to stay below this big red line, it means that sellers are in charge, okay, going to likely push the price below this place where we can see buyers are strong. So that's the concept. So now let's see the consolidation up, down, up, down. So any staying below, any closing below the red line, deep big red line, is a sign that buyers are becoming weak or buyers are still continually being weakened below the red line. So up, down, close, up, down, hit, up, close. So let me look at it well. Good. Hit a little up, down, close, moves up, hit, up, break, close, hit, hit, stay, hit it, stay above, boom, to the upside. So we can see that at this point, sellers were also here. They push price down. Um, okay. No, let me. Good. Yeah, so price gets, so what is going to let you know that sellers are here? When price got to that area, we started seeing drops. So that is what shows you that this place is a resistance or sellers are there. But now price was able to break and close, go above there, which means all the sellers here have become weak. So price above this point also is going to be bullish, going to buy. Simple. Okay. So now after price gives the indication to go bullish above here, it drops back to stay below this same point and kept selling. And where did it sell to? It came straight to where the magnet is, the big red line. Okay, so the red line is exactly where buyers are very strong at. Okay, so it came very straight to that place, hit. We had a move to the upside, a little move, then hit again, broke it. The break of it or closing below it again here. What is the meaning of that? Okay, the buyers who are here have still become weak. So this is a very key level right now. But any close below the key level or this support means sellers are trying to tell us they want to take charge. So we closed below, we went above, we came down, we hit it, we stayed below and we sold. It sold, kept selling. So this is the first time that price was able to stay below and perfectly sold. Okay, we can see here. And after it sold from below here, we can see that price came back, retested, drop, went a little bit above, boom, sold again, retested again, boom, sold again, went up, broke above it, and just kept moving up. Okay, so broke just went above it. So the concept here now is that below this big red line, sellers are going to push the price down. Above it, buyers are going to push the price up. That's the concept. So your entry or your point where you be interested to buy or sell is just the red line, because we can see that exactly that point, there is strong reaction either for buys or for sells. Okay, so now we are above that point, which means market is bullish. But we can see that overall, this pattern looks like a rising wedge. Okay, price move up, price is just moving up, but sideways kind of, but it's just going up. And where did it go up to? If you use your Fibonacci from this last swing lower high to the low that it gave us here, this is like a premium pullback. Pullback up inside premium 78.6%, drop to 61, retest 78.6%, and could not go further. Currently, as we see, price has dropped, hit 61.8%, retest 78.6, broke 61, attempted retesting or going above 61, couldn't stay above it. So we can see that if price were to come and stay above here, the likelihood that it's going to reach out to 678 again was going to be high. But yeah, it hit here, broke it, came up, hit up, double top, boom, breaks the neckline, and that's where we are right now. So price hits inside of this current range. Okay, inside, because we can see a lower low, a lower high, then a new lower low, which means we are bearish at this point. Okay, look at the market clearly. And if any one of you have any question, you can just ask me along the way. So we have a high, we have a lower low, because this was the previous low that gave the high. We took it out. We tested, move up, took it out. Though there was a ranging market here, we took it out. Okay, this is the line chart. So a close below this point is very significant on the line chart. Price now pushes up, makes a lower high, then it comes down and then takes this low also, which means we have another break of structure to the downside. So up to this point and this point, the market is bearish. So though price has been bullish from this point all the way up, it just went to retest the premium zone for this bearish structure, swing structure. Okay, and so we were bullish, but the market was already bearish from the highest time frame. Okay, so now that we have reacted inside this premium and the market is showing, so price reacted into the premium, and then the market is showing us. So let's see what we can find. What is the last important high when the market was going up? So from here we can see a higher high, lower high, higher high, lower high. This is not a higher high, but we have a lower high again here, but price moves up, higher high, we got a lower high, failure swing, a lower low, another failure swing, a lower high. Then now we are creating a lower low now. Okay, now we are creating a lower low. So I would, though this pullback was a very small one, I would expect price to dip down more. That's what all of us are going to be expecting. But if we look at the bigger structure, we can see that we have let's see, a higher high, lower high, higher high. If we only take this last lower high out, if price is able to take this lower high out, then we are going to say that, okay, the market has changed from this bullish internal move up to become bearish. So we need this lower high because from here, this point, the market now made a new higher high, taking out this previous high out. Okay, so from here. So from here, we need price to come down and take this point out. Then we can say price has changed the character from a bullish move to bearish. But internally here, we could still map up this kind of changes here and start selling. Okay, but when price now takes this external low out, whether it's going to get to the red line here, I don't know. But once it takes this one out, there is a close below this point, is that point here. The market is going to probably do a pullback. It might do a bigger pullback, an extended pullback into somewhere here at the top here, or it might just do a smaller pullback into somewhere here, and we should expect another bearish move to the downside. And below this point, sellers. Above this point, buyers. Okay, so I mean that concept is not here right now. I'm just trying to explain the structure. Okay, what I can anticipate that the market would do in terms of the structure, price action. Okay, so once we are able to sweep this external low, we should be able to expect a pullback. Okay, then we will have more bearish move, a pullback, and then a more bearish move. So these are some of the thoughts that we have to be looking at in terms of understanding the pair. So let me go back to the candlesticks. So this is still the weekly time frame on the dollar index DXY.
Uh,
So,
Sir,
yes.
can you hear me? What if you use your Fibonacci to measure the movement from this higher low to the higher high?
What is what?
And what if you use your Fibonacci retracement to measure from this higher low to the higher high and see where the retracement are, the
You said
Fibonacci
you said
retracement?
what is the use?
No, no, no. I said, what if you use your Fibonacci retracement to
Uh-huh.
measure from this higher low to the higher high? And let's
You
say
mean
the
this place?
yes, yeah,
Yes.
exactly. So
We can also measure here like this.
yeah,
So
yeah, so
this is an important lower high and then a higher high.
higher
So
high,
we
yes,
can measure that. But if we measure it this way, we have price um hitting 50% from up here, 50%, 50%, 50%, 38, 50, 38, 50, 38, 50, 38, 50, 23, which is a good move. Boom to 61. And we can see price has been testing 61, 61, 61, 61. What I was looking for, I was looking to see price come and stay above 61, and then it was going to buy up to 50 or 38 again. That was
yes,
my
yeah, exactly.
initial thought, because if price is able to close above this internal consolidation here, then all the sellers that are here trying to push price down, if price is able to close above them here, at this point up is going to push up because there is clean traffic and imbalances up here. Price is going to fill up to at least here or up here, the trend line here. So this is something that I was looking forward before price would drop. I was looking forward for this, but it did not. Okay, price tried because this is the weekly time frame. So the last, I think, 2 weeks or something like that, the market came down, reject. You can see the rejection now. You can see the rejection.
Yeah,
The market came and hit
um,
here and then close this last week. No, this is the monthly, yes. So this month, last month, January, the market came down moved all the way up like it was going to do that thing. What I'm saying, it just moved up, but it hit this place and everything rejected. You can see the wick. Everything
Yes.
rejected, came back, and then closed down. So if you are expecting price to be bullish because of the news or the sentiment, I don't think it's going to be bullish. Okay, because this last month candle was supposed to stay up here and close, and that was going to now align with the sentiment or the news, news you have this week. So though the news for this week, as you were explaining, can make the market bullish, the technicals on the long term or the higher time frame is not telling us that. And I believe the technicals is going to win, okay, more than the news. Okay, so yes, market can move up, but then it is until it's able to move up to and close above here, there's nothing like a bullish market. The technicals are not going to tell us that. Okay, and we can see even this month. How many weeks are we now? Is it 2 weeks or 1 week? What's today's date? 12?
At least for
Yes. So how many days? Like 12 days. This month open, the candle went up, retested some part of the body of last month up to this point, and it has rejected. So the month is still young. A lot of things can happen, but we can see there has been already a retest and a wick left up here, and price is trying to stay bearish. So it can still reject up and then go up and close bullish, and it can still continue to stay bearish and keeps pushing down and then drop. I hope you get my point. Yes. So we can measure on the fib
yes, yes. I
from
understand.
this swing internal low or external low to this high. Even if we do it that way, price is at this 61.8% drop. If we don't stay above it, it will not buy. If we are below it, it's going to reach out to 78. This is simple. But you can see when price dropped down, it couldn't get to the 78. So I believe price is going to reach down to the 78 more than it going up, staying above 61 and going up. That's what I think, the bias that I think is going to happen. Okay. But now, if price is going to be down, if when it comes below this 678.6%, we need it to close below 100%, which is here, for us to have an external break of structure for to validate this whole bearish thing. After this, there is a higher chance price is going to do a bigger pullback and then continue to go bearish for the longer term if it wants to. I hope you understand. Depending on the market makers, how they will move the market. I hope you understand. But
Okay.
for now,
Yes.
the initial targets are my expectation is for the market, according to these technicals, to reach out to this 78, break it a little bit, maybe retest it and reach out to 100%, break it for a break of external structure. Then we can expect some pullbacks. I hope you understand.
Yes.
Okay, good. So, not to spend too much time, I think we have an idea from the higher time frame what we're expecting. So this is the monthly again. We need to move to, let's say we move to 4 hour because the daily and weekly everything is, even when you look at the weekly time frame, let's see the weekly. So look at the weekly time frame. Okay. So we had one big engulfing weekly candle. The next one became like a rejected. Then the next one pushed up, swept the high of the previous one, which is tapping into a fair value gap. Then the next one, this week's candle is trying to engulf. If tomorrow comes, if this week candle closes bearish, there is no sign that this market is going to be bullish. Are you seeing the weekly?
Yep. Yeah,
Are
I
you
can
seeing the
see.
weekly? Yes. If this candle closes
Yes,
bearish,
I can
look at
see.
the pattern. There is no sign that the market is going to be bullish. Okay. So we are seeing one engulfing and then a second weekly engulfing candle. And if you look at it closely, you can see that this bearish, big bearish candle from here, price is trading inside it. So there is clean idea for the dollar index to be bearish. We can have some rejections, pullbacks, but on the long term, I think it should be able to stay bearish. So we have clean traffic to expect price to drop up to somewhere this point, which is the trade setup. And this should translate into um USD JPY. So we can see USD JPY on the weekly time frame. Look at this candle now. No, this is yeah, USD JPY. You can see this is weekly. Last week's candle closed big bearish. Can you see that? No, this week's candle price started dropping, you see, engulfing. Then let's see even the daily time frame. Price just pulled back up big. And I think we did this analysis some time ago. I myself and you, Gabriel, where the red line was. This was the point that we'll be expecting market to come up to